Okay, so welcome to today's lesson. This is Mac 3701. We're going to get started. I know some people can't make today's class for some reasons, and also it is Friday, so I guess many people don't really want a class on a Friday. But for the next 8 to 10 weeks or so, we will be having a Mac 3701 class. Today's class will be quite short. We're just going to give a high level overview. So it'll probably be like about 45 minutes or so. And then from next week, it'll be full on because we're going to actually do question papers within the class. So today's merely a high level overview of Mac 3701 so you can gain a perspective of what Mac 3701 is all about and perhaps that will help you navigate um, the various sections within Mac 3701. So just to give you a high level of the various topics that is covered within management accounting, it is basically we will have your variable costing and absorption costing. You would have activity-based costing, joint and byproducts, process costing. We'll have standard costing. Then we have cost value, cost volume, profit analysis, which is known as CVP. We have performance management. We have performance management. We have transfer pricing. We have long-term decision making, and we have relevant costing and optimization. So those are the various topics within management accounting. But let's just look at it even on a bigger picture. Yesterday we had Mac 3702. We had a class on Mac 3702. And I explained Mac 3702 in terms of the accounting equation, where we say assets equals equity plus liabilities. On the asset side, we have from a finance point of view, that will be investments. And then from the equity and liability side, from a finance perspective, that would be sources of finance. Now, when you look at the asset side, it would be capital budgeting to a large extent. And then on the equity and liability side, you had sources of finance, you had capital structure, you had weighted average cost of capital. Then you had other topics such as dividends, such as mergers and acquisitions, such as dividends, mergers and acquisitions, financial analysis. And then you have working capital. Working capital basically can fits under investments, under assets, but more from an operational point of view. So if you look at it from, if you must read any textbook on accounting or any textbook on finance, they will most likely they will most likely share or describe the four decisions within the world of finance. So number one would be the financing decision. So when you have an idea, you kind of need finance, and hence you will decide how can I finance this venture, this idea that I have. Once you obtain the finance, you then make investment decisions. You have the money. What are you going to use the money on? Now, ultimately, in your plan, before you even think about finance and investments, you most likely you would obviously know what investments you'd want, and then you'd know the cost thereof, and hence you'll then have to obtain finance. So we have the financing decision, how you're going to obtain finance, and then once you have the finance, how you're going to utilize the finance, and that is what investments, what assets are you going to acquire. Now, the financing decision and the investment decision sits within MAC 3702 financial management. Then from there, once you have the investments, you're going to then see how can you use this investments to actually generate a profit. And that is your operational decision. Once you, how you operate, how you make money, and then as a result of needing to make money, you will have to incur costs, you will end up with a profit. And that is known as the operating decision. Then once you make a profit, you need to make one final decision. What are you going to do with that profit? And what you're going to do with that profit is generally three things you can do. Number one, take all the profit and reinvest it in the business. number two, and in no particular order. Number two, take all that profits and pay it out as a dividend. So that is the shareholders take all the money. And then option number three, which is the most common approach, and that is keep some and distribute some as a dividend. That is known as the distribution decision. Once again, the investment, the financing, and the distribution decision sits within financial management, and that is MAC 3702. So what sits within MAC 3701? It's basically that operating decision. How are you going to make money? How are you going to generate money? And as a result of needing to generate money, you're going to have to incur costs. So how can you control costs so as to generate the highest profit possible? So basically, management accounting is dealing with the operating decision from that four decisions. Now think about this. When you must think about management accounting, you can understand you are dealing with the profit figure. Now remember, profit is income less expenses or revenue less costs. Now, from a management accounting point of view or cost accounting point of view, how do you determine revenue? You will obviously provide services or you'll sell products, but revenue is calculated as follows. Um, Selling price multiplied by number of units sold. Okay, so as you can see, we're already breaking down revenue equals selling price multiplied by number of units or quantity. So now that's dealing with revenue. Then we are looking at, we said management accounting is dealing with operating decision, which is about how do you generate profit. Generating profit is making sales, and then as a result of making sales, you will have to incur costs. So we spoke about the sales portion, which is selling price times quantity. Now with the cost side, from a cost accounting point of view, we break that up into two parts. What are the two parts? You have variable costs and you have fixed costs. Variable costs will also be cost per unit multiplied by quantity, and then your fixed costs, it is just basically whatever other costs you need to incur that is not driven by the number of units that you sell or produce. So that is how you need to think about it. And when you look at all the topics within management accounting, if you look at joint and buy products, it is all about how do you cost a product. If you look at activity-based costing, traditional costing, it is all about how do you cost a product, because activity-based costing, traditional costing, is all about allocating overheads. Similarly, when you look at standard costing is all about planning and controlling costs. Then you look at budgets. Budget is all about what you expect as a revenue, and as a result of needing to meet the sales target, what cost do you need to incur? If you look at transfer pricing and performance management, transfer pricing is all about what price do divisions charge each other so that an organization as a whole generates a better profit. With performance management, it is about how do you how do we call that? How do we incentivize management based on the performance of the business? So all of these things are about that bottom line, that profit line item. So you just need to keep that in mind. What is management accounting about? It's basically affecting that profit line item, and they're just basically various techniques and various ways of doing that. So please be aware and understand that big picture so that when we come into the nitty gritty, you kind of get an idea of what you are actually trying to achieve. So the management accountant is all about focusing on that profit line item and how they can generate better returns from a revenue point of view and how they can minimize costs. Okay, so just keep that in mind. And From a management accounting point of view, never forget that profit is sales minus costs. Never forget that sales is selling price times quantity. Never forget that costs is broken up into variable and fixed. And with variable, it is also cost per unit times quantity. So please be aware of that. Okay? Because ultimately you're coming down to that profit figure and you want to provide products to in such a manner that you generate enough return for the business and ultimately for the shareholders. So please keep that in mind. Now, that is the focus of management accounting. What's important to note? What is important to note? You need to think beyond just being an accountant. You need to think beyond that. And although you want to manage costs, and this is where the discussion parts of management accounting comes in, when you are dealing with the various costing, you can't just want to minimize costs at the expense of quality. Because remember, if you minimize costs and the quality reduces, ultimately your profits will reduce, even though you are minimizing costs. Why will your profits reduce? It is because your revenue will most likely reduce because people's not going to buy a product that is not of a quality or standard that they are looking for. So you need to think beyond just minimizing costs and beyond standard costing and beyond all of those. Understand what's the purpose of standard costing. Understand what is the purpose of variable costing and activity-based costing and all of those type of things. Understand all of that when you provide commentary and all of those type of things. The structure of this course, remember, the one of the most basic aspects of management accounting is the nature and classification of costs. It is understanding the difference between variable costing and absorption costing, understanding traditional costing and understanding activity-based costing, because that will impact throughout the course. Okay, so you need to know that. You need to know it at the back of your hand. That's going to impact in almost every topic going forward. So when we talk about nature and classification, you can read the details on the website, on the platform, on the learning management platform, where we explain the different types of costs and so forth. But you need to identify what is a direct cost, what is a indirect cost, what is fixed, what is variable, what is and those type of things. Okay, so that's important for you to understand. The next important thing that is critical for this course is to differentiate between the variable costing system and the absorption costing system. Remember, the absorption costing system is very important because you need it for financial reporting purposes. The variable costing system is useful. It is mainly used for management decision making. So you hardly use absorption costing to make decisions, but you need it for financial reporting purposes, whereas management decisions is mainly based on um, the variable costing. Why is that the case? The question is why? Because we are dealing with profits, we are dealing with the short term, we're dealing with short term decisions. And as a result, fixed costs is generally a long term thing. You can't change it immediately. And no matter which decision you go with, you will most likely still incur that fixed cost. And therefore, the only thing that management can change now or immediately is a variable cost. And that is why we use variable costing for decision making. So please be aware of that. Okay. So that is basically the difference. Now, when it comes to variable costing, it's very and absorption costing. It's important to understand and take note of the question. They will generally ask you, dear student, what is the cost of a product? And that is when you must think about variable costing versus absorption costing, because the cost of a product is dependent upon which costing system you are using. Now, take note that the cost of a product using the absorption costing, using the variable costing method, is direct material, direct labor, and overheads, manufacturing overheads. But which manufacturing overheads? Only variable. When they say, dear student, please determine the cost of a product from an absorption, from using the absorption costing system, then once again, it is again the cost of a product, direct material, direct labor, and manufacturing overheads. But this time, what is manufacturing overheads made up of? It is made up of fixed and variable. So that's important to note. Okay, so please be aware of that. So now, so please be aware of that. Okay, so it is the cost of a product, variable costing method. It is direct material, direct labor, manufacturing overheads. But which manufacturing overheads? Only variable. Then, when you are looking at what's the other one? If you're looking at the cost of a product using the absorption costing method, once again, it's the three: direct material, direct labor, manufacturing overheads. At this time, manufacturing overheads is fixed and variable. So always remember that the cost of a product is direct material, direct labor, manufacturing overheads. But which manufacturing overheads? It depends on the costing system. So only variable if it is the variable costing system, and then fixed and variable if it is the absorption costing method. That is critical. Now, when they talk about the cost of a product, that is the cost of inventory. So we're only interested in manufacturing costs. We're only interested in production costs. So therefore, it should not include any costs that is non-manufacturing, non-production. Examples would be your selling and distribution costs. Okay, so please take note of that. Selling and distribution costs um, or non-manufacturing costs or non-production costs. So take note of that. You need to, the cost of a product needs to be differentiated when they say, dear student, please determine the contribution margin. Dear student, please determine the gross profit. You need to differentiate from that. So when they ask you for gross profit, then it is sales minus cost of sales. Cost of sales is all production costs. Okay? So production cost from an absorption costing method is direct material, direct labor, manufacturing overheads. Because absorption, it is fixed and variable manufacturing overheads. But now here is where you need to pay attention. When they ask you for contribution margin is sales minus total variable costs. That means it is manufacturing variable costs as well as non-manufacturing variable costs. Now, this is a typical area where most students get confused or struggle with. If they ask you for the cost of a product using the variable costing, then you're only including manufacturing costs, which is direct material, direct labor, manufacturing overheads, but variable only. When they ask you for contribution margin is sales minus total variable costs. Now, total variable costs is total variable cost is manufacturing variable costs which is made up of those three things: direct material, direct labor, and manufacturing overheads, variable. But then it also includes non-manufacturing variable costs, which could be an example is selling and distribution. And this is very, very important to understand. You must not confuse contribution margin with the cost of a product. But we will test this throughout the course, and I will reinforce it and I will re-emphasize it each and every time because it is something of extreme importance and we're going to make sure we all get it right. That is the base that I wanted to cover. But there's one last thing that I want to talk about and then we will stop for today. And then next week, we will go through actual questions, covering a question on activity-based costing, covering a question on traditional costing. By doing that, we will automatically be covering variable costing and absorption costing systems. Um, so what you need to know is the following. What you need to know is the following. We need to understand that there are three costing systems. So although we are used to saying there are only two, there's actually three. So yes, it is the variable costing system and the absorption costing system. But what you should note that the absorption costing system, there's two ways, okay? There's two types. So we are correct in saying there are two costing systems, the variable costing system and the absorption costing system. But you should note that the absorption costing system have two types. So the absorption costing system, the typical one is the absorption costing system using the traditional costing method to allocate overheads. And the second type is the absorption costing system using activity-based costing to allocate manufacturing overheads. So that's just important to note. Okay, so please take note of that and be aware that yes, there are only two costing systems, variable and absorption, but absorption have two types. Either allocating overheads and specifically allocating fixed overheads using the traditional costing method, or allocating fixed overheads using the activity-based costing method. So just take note of that. So to recap, this is a short lesson. We're just having a short lesson today. So just to recap, next week we're going to have a full-on lesson where we're going to cover a question on traditional costing. We're going to cover a question on activity-based costing, and we'll cover questions on absorption versus variable costing. So just to recap, we gave a high-level overview of what management accounting is about and how it fits into the four decisions of finance. Then we gave a high-level overview of the topics that are covered and what management accounting is all about in terms of we're focusing on the operating decision. And in terms of the operating decision, what's the focus? How do we manage profits? So profit is sales less costs. What's important to note that costs can be broken up into fixed and variable. And what's important to note that sales is selling price per unit times cost. Variable cost is cost per unit. Sales is selling price times quantity, and variable cost is cost per unit times quantity. So that's important to note. Okay. So for today, we're going to stop there. If you have any questions, just ask me, then we can cover. But then from next week, we'll do a full-on question going through the various activities. Abigail, I have a question. Danielle, do you have a question? If not, then we will stop there for today. Anel, have a question? Abigail, nothing? If no question, then it's fine, and I will end the lesson now. Okay. So I don't think there's any questions. I don't see anything in the chat. So have a good weekend. I'll see you guys next week. We will have some questions going forward.